everyone, welcome back. So today we're gonna continue with the next strategy, which is smart beta strategy. So let's read article 22, smart beta strategy. First one is definition. Smart beta strategy or factor investing is a strategy for building a portfolio according to a system. It's based on rules and the use of fundamental business factors like liquidity, value, and quality as a criteria for making investment decisions. Smart beta is a scaling strategy of the passive investment strategy. With passive investing, investor only need to buy the entire component shares of an index at a proportion of market capitalization. They hold for a long term to achieve returns comparable to the reference index. With smart beta, the portfolio weights are determined based on fundamental factors rather than market capitalization. The goal is to increase the proportion of stocks with high return potential, and in contrast, reduce the proportion of less potential stocks. It optimizes the portfolio with better returns compared to passive investment strategies. Theoretically, smart beta combines components of both passive and active investment. So, let's read an example of a smart beta. An investor believes that over the long term, stocks with low PE tend to generate higher returns than the overall market average. Applying this investment perspective by taking VN index as a benchmark, this investor builds a portfolio according to the beta strategy as follows. Buy all VN index shares and hold for long term. The weights are determined according to the rules. The lower P, the higher the weight. As an illustration, assume VN index has only 5 component stocks A, B, C, D, and E. Investors use PE as a parameter to calculate the portfolio weight as shown in the table below. So let's look at the table. We have share A, B, C, D with the PE 5, 7, 10, 13, and 15. The portfolio weights 30%, 26%, 20%, 14%, and 10%. So with a summary of 50 PE, which is 50, and 100% portfolio weights. This strategy is quite similar to passive investing, but the PE ratio is used to determine portfolio weights instead of market capitalization. In the same instance, investors can determine portfolio weights using other methods, as long as the first principle is maintained. Increase the weights of stock with low PE and reduce the weights of stock with high PE. Below are some prime examples. Only invest in X stock in VN index with the lowest PE, also known as short listing. For example, suppose VN index has 500 stocks. Invest in only the bottom 550 stocks with the lowest PE. The proportion is 2% for each shortlisted stock and none for others. Determine an acceptable threshold of the PE and the only buy stocks satisfying this constraint. Now, let's talk about some commonly used factors in smart beta strategy. In investing, a factor is understood as a variable of or characteristic highly correlated with stock returns. The factor can also be defined broadly in any variable that investors believe is valuable in ranking stocks and predicting future returns and risks. Below are 5 commonly used and widely accepted factors. Value. In the long run, investing in stocks undervalued by the market at a higher rate of return than overvalued stocks. The value factor can be measured from key metrics in corporate financial statements, such as P/E ratio, dividends, income, cash flows, EBIT, and EBITDA. The second one is market capitalization. Small cap stocks tend to rise more sharply than large cap stocks. The third one is volatility. Increasing the weight of low risk stocks can help improve the portfolio returns on risk. Quality. High quality companies increase the share price over time to reflect the intrinsic value. Some basic criteria of high quality are strong, stable profitability, and low leverage ratio. Momentum. Recently, rising stocks tend to continue gaining similar momentum in the short term. In reality, there are hundreds of factors that have been identified and used in building portfolios under smart beta. Additionally, investors can combine them to create more variations of this strategy. So now, let's read about strengths and weaknesses of this strategy. Combining active and passive investing, the smart beta strategy has several advantages of passive investing, such as transparency, transaction costs, and low monitoring costs. At the same time, smart beta also shares advantages of active investing, like higher potential return than average, and diversify investing depending on the preference and domain knowledge of each investor. However, identifying key factors and rules in smart beta strategy can be complex. It requires skills in testing historical data and experience, plus in-depth knowledge of financials and analysis. Besides, these factors often come from corporate financial statement data. In Vietnam, it can be a huge hurdle to gather detailed, complete, and accurate financial statements of all listed companies. It remains the main challenge for investors following this strategy. So now it's about application in algorithmic trading in Vietnam. With an algorithmic trading system, computing the financial factors of all stocks in the market has become simpler than ever. Besides common metrics like P, PB, and ROE, investors can freely customize for the metrics as designed. An example is the short-term unrealized revenue and divided by the total revenue of the last 4 quarters. It reflects the percentage of potential revenue recorded in the next 4 quarters. Under the same conditions, the higher this factor is, the more stable and solid company is. An algorithm following the smart beta strategy can include many of the customized metrics like those above. They can be adjusted to different ways that the portfolio desires. Know that it's key to restrict frequent portfolio rebalancing and aggressive trading. It's to ensure the passive investing components of the portfolio. So this smart beta has a lot of things, right? All right. And I hope you can find some good information and knowledge from this strategy. So that's it for today. And tomorrow, we're gonna see each other for the next strategy.